Yo, what's up, guys? We're back at it again. This is Mr. Sombonyo, Mr. Blues FX, and we're back at it again, guys. You know, we gotta end this year on a high. We gotta end this year on some, faggy gas mode, on some Sombonyo way, on some money. We gotta make the money, guys. We gotta keep on pushing. Okay, guys. So in this video, we're gonna be I will first do a top-down analysis, and we're gonna continue with Yes. Yeah, guys, so let's get to it. So right here you can see I already started marking the 3-month fair value gap. But wait. Before we get into that, don't forget to subscribe. Oh yeah. Anyway, guys, let's get to it. This is a 3-month busy, right? 3-month busy. As this is a 3-month busy, we know with this 3-month busy, we're targeting these highs, right? End goal, right? Supposed to look at the end goal for what may happen at the end of this year. This high number 1. Did we break high number 2 right here? We have to go into the lower time frames. Okay. We're gonna mark where everything turned. So this is another 3-month fair value gap. 3-month busy. Yeah. Okay. So this is high number 1, this is high number 2. As you can't see it here, obviously these are fair value gaps. You can't see properly here, so let's go to a lower time frame. Okay. So right here, look at this, look at the magic. So obviously, right, we're here. The market went up for weeks and weeks and reached its ultimate high, then came back down and retested this 3-month fair value gap, the 3-month busy, then went up again. As it went up again, it exhausted, and it came back into an area for a buy. So right here is another fair value gap that it exhausted in, right? I'm not gonna even make it too long. It exhausted in this weekly fair value gap, weekly busy. And what I'm actually trying to say in simple terms here is that, guys, take this as painting. You see, when you're painting a wall, right? Look at this. When you're painting a wall, in this situation, you're going to start from the bottom. You're going to go up, down. As you come down, you're going to come back to the spots or the spaces that you have missed. Then you go up again, right here. Then you go down to the spots you have missed, like the areas that you have left out. Take this type of trading as painting, because that's the easiest way to understand it with fair value gaps. So fair value gaps are what? You go paint. As you are painting up, you know that it won't be perfect. As you're painting up with a roller, you go up on a wall, it leaves a space. You go back onto that space that you left right there, you see, and go and fill back that space. That's the market balancing itself. That's how the market balances itself. That's how the algorithm works. It goes back to that area and balances itself, and the market is back. It feels good too. But as we are looking at this, as we see a high here, the high was tested, and we have a weekly right here, weekly SIBI. You see, and if you look, the market entered the SIBI last week and reacted of it hard, like it really reacted it hard and ran away from it, right? As you see, it ran away from it, but it didn't break the high. So what we are trying to see is this. Let me show you real quick. This is a weekly silly, right? What we are trying to see is the market breaking this high and going into this area and filling this whole fair value gap. As we see the market fill this whole fair value gap, we expect it to turn around here and go back lower to break this low. But these are type of trades that, okay, it's a big time frame trade, which we might see it happen this year, going to the end. You see, like we have, I think, like 6 weeks until the end of the year, where we're gonna keep on pushing on this YouTube channel, by the way, guys. But anyway, here, guys, it's gonna push in here, right, and go lower for these lows. This low right here, you see, that low right there is the initial goal of a trade taken in this area, to go break this low. And what we're looking for this week, for example, a lot of people are gonna wonder, oh, why do we leave fair value gaps like this here? You see right here, this is a fair value gap. And ironically, right here, I'm not gonna actually mark it. Okay, let me just give an arrow to it. You see right here, these two red candles right here, those are order blocks. This fair value gap has an order block. This is a powerful area. But a lot of you would be like, so Mr. Mystery Blues FX, why did it just go up? Why did it not come back, test this area and push off it? Guys, this is a runaway gap. So what runaway gaps do is give the market more power. And some traders new to this type of strategy may be like, but no way. Why is it not coming back into this area? Why? There's a lot of whys. But let me show you something quickly. You see, this candle went up, right? And this one broke the high. So the structure was broken right here, right? The structure was broken with this candle right here, right? So, would you look at this? Let me show you some juice. Oh, look at this. You see the next week's candle that opened. What did the next week's candle do? Last week's candle, it literally retested the high that was broken. It retested the high and went up. Literally did that. And as it did that, it really confirmed to you that, okay, I closed as a bullish candle. We are really in a bullish market right now. So I retested this area. It's enough. And this will be a runaway gap. When we come back to this area, there's a high probability that, okay, we're going to violate this area. This is an area of market maker. Like, they put a lot of power in this area. So, for us to go up so much. You get me? So, guys, as we are working on this video, guys, don't forget that we're trying to push it, guys. We're trying to get this video to 1,000 likes. Also 1,000 views, also for me to also hit 1,000 subscribers by the end of this month. Let's keep on pushing, guys. Let's keep on pushing. Let's keep on getting to it, guys. Just focus. You got this. In trading, don't overthink it, guys. Like, keep calm. We got this. But let's get back to business. So here's the biggest high right here, right? This is the most, like, this is NASDAQ's highest high right here. When was it created? 22 November. The week of the 22nd. It was created on that week of November 2021. So that's like 2 years ago. Almost 2 years ago. And if you think about that, today is the, what's the date today, guys? The 20th. So the high of the year in 2021 was created when? The week of the 22nd. The low of the year was created when? In October. So of 2022, last year. So October and November are really important months of creating the year's high and year's low. Okay. So what we are expecting is to break this high. to break this high and close probably in this area so we can go for lower prices and fetch lower prices. Yes, it may happen that we break this high and this high because we are in a bullish market. Because we broke this high, we broke this high. Here's another high that we broke. You see, we broke 2 highs, 3 highs. Here's another one right here. But this is the higher time frame type of analysis you need to get familiar with, type of thinking you need to get familiar with. So what we're expecting to happen really, guys, is that we are going to create a high this week. We're going to create the high of the year this week. So expect higher prices. I repeat, we are going to expect higher prices this week. So, no, I just said that wrong. Rather, let me say, we are in a bullish market, and it's the week of November where highs normally happen. So expect a high this week. So expect the market to still go up this week. Don't expect us to go lower yet. I've been before we broke these areas, if you remember the first few videos, I was expecting us to go lower. But now that I see the amount of highs we've broken, we're going to break this high. This high has been practically raided here. We touched it. It's been practically raided a bit. But they know that a lot of people, a lot of retail traders, are putting buy stops here. A lot of buy stops here. So what it's going to do on that day, it's going to go in, go out, blow people. After blowing people, it's going to go up, fill this area, or turn at the 50% mark. What do we call the 50% mark? The consequent encroachment. With the consequent encroachment, that's where we are highly gonna turn. There's a high possibility that we're gonna turn. And maybe I should mark that to make it more interesting right here. I'm not gonna even check it, guys. Sorry. Oh, you know what? Let me be more thorough with what I'm doing. As I'm thorough like this, let's say one day, and actually see. Where am I? Yeah, it's okay there, I think. Let's go to 1 week. It is in the middle. I was so accurate without that. Yeah, it is in the middle. Let's mark this as our consequent encroachment. 1 week. CB CE. Right. As we turn by the 1 week CB, consequent encroachment here. Because it breaks the high right here, right? After we broke this high, we turn here and we go for lower prices. The high of the year is expected in this area right here. That I am going to tell you. I don't think there's going to be a news influx this week because all these big news have passed that we go and break this area. But what the market would never know. But yeah, guys. So I'm expecting us to turn at this 50% mark. At that 50% mark, we know that, okay. Now we have reached the high of the year because of the what? Of the seasonal tendencies. Seasonal tendencies that if we break a lot of lows during this time, we create a low. If we break a lot of highs during this time, we create a high between November and what? October and November. And at this moment, we've been breaking a lot of highs. So what do we expect? To create the high of the year so that lower prices are expected. Because what happens usually in December? December, I think it ranges. Because look at the range here. Let's look for the other December. Here's December's price. I think somewhere here. December. December last year moved, hey? Sorry, guys. Excuse me. But guys, as you see the picture, the higher time frame picture. So, after this, guys, since I have shown you this, let's get to business on what I really, really want to teach. Market maker structure shift. How to use it Like in the first video, I introduced it to you in a way that you understand what is going on, so that when I reveal the bigger things, you don't get confused. So let's go to the 1 hour chart. Love it. On the 1 hour chart, a lot of people have been asking me during the week, what is this area called? This is a runaway gap. You see this? This is a runaway gap. And I won't lie to you, I don't see us filling this area now. I don't want us to fill this area now. I want us, okay, we can come back to the 50% mark and go up. Or just break these lows, test, go up. And go break the high and go to that 1 week CB. Because as soon as we do that, we give ourselves more power to come lower. Because since this is a runaway gap, it's giving us power to go up and go test those areas. So we do what? We go lower. We gotta push, guys. I want us to do that. But with this, what we look for a perfect market maker structure shift. 1 hour PDRA, 15-minute market maker structure shift, 1 minute fair value gap. So what I mean by that is that practically on this series I've just been teaching fair value gaps, but there's also something called order blocks. So there's something called order blocks, there's something called breakers, but breakers are also order blocks. There's something called, it's order blocks, fair value gaps, breakers, retesting of highs. All those things play a part in this. So the 1 hour time frame for you day traders, like for those looking for entries in day trades. So what do? You look for a 1 hour PDRA, right? Let me look for a perfect example to show you this. Okay, I found the area. Let's start here. Right. Okay, let's say we're looking at this area right here, right? This area, there's an order block here and a fair value gap. This is the fair value gap. These four candles, 1, 2, 3, 4. That's on one order block. Never let other people tell you that no, these are different order blocks. That's one order block. And the most high probability buy in this area is on this second candle. You see in this area it went up like this. It normally doesn't happen like this. But let's go to the 15-minute. Where was I? I was in October 2023. October 2023. Did it remove itself? Okay. You know what? Let's just focus on this area. You see in this area, right? Right here. We are here. What did market do? As I was teaching in the final episode, right? Let's look at this like this. I'll start with it in the 15-minute, go to the 1 hour, and go to the 1 minute. I think that would make better sense and you will have better understanding of what's going on here. So here, right, there was this high, the high of this range, right? This is the high. And the low of this range. We can say the low is here of this range, right? As I taught in the first video of me explaining this, what happens? The market was ranging. Yeah, the market was ranging. And in this area, what did it do? It broke the low. After breaking the low, what did it do? It came back and broke the high. So it took the sell side liquidity first, showing you that we want to get lower, we want to go lower. We broke that side first. Took the sell side liquidity, came back up, took the buy side liquidity. The market had really bad conditions to trade here, right? But there's some reason why we turned here, which is a higher time frame PDRA on the 1 hour. We'll go back to that. But we broke this high here and we broke this low here. But we first started with the low, then we broke the high. As soon as we did that, what do we look for? So, as soon as the low is broken first, then the high is broken too. Wait for the market to come break the low right here. So, it left its own low, right? Let me change the color of my lows. It left its own low. It left its own low right here. And as we break that, we leave this fair value gap, right? The candle that broke it was so huge. But this is a fair value gap. On the 15-minute, it retests the low. Like the low broken into the fair value gap. So this is a really good sell setup. Right here. This fair value gap that we retested. But we are not looking for a 5-minute or 15-minute entry. You can take that entry, but let's go to 1 minute. Oh my lord. I hate when the charts do this. Because I'm focused on one area. I hope it's going to show. Oh, you know what, guys? Let's focus on the 15-minute right here. Because these charts are really giving me that problem. But anyway, guys, okay. I'll find a way to show you the 1 minute. But here, guys, what happened was that, look. Market maker structure shift. What happened? We broke a low first. And at this area, if you are not looking at the chart, you'll think, perfect. Here's a fair value gap here. Here's a fair value gap here. We are buying. No, it's not the initial thing. You would really have to look at what was going on before the market broke. So here it was ranging. It broke the low. Then after it broke the low, it went back. It broke the high. After it broke the high, it broke the low here. This low. Market maker what? Structure shift. After it broke this low here, it went lower for lower prices. Took this low to, which confirmed further that what? This is a market maker structure shift. Right. Then it played around in this area, ranged for a really long time here, went lower again. Then when we came back up, we got our perfect entry into this fair value gap. Sorry guys for that. Oh my lord. Okay, sorry guys for that interruption. So right here, what would happen was the market maker structure shift right here, right? We broke the low, we broke the high, then came back lower and left this area, this void right here, right? And what happened? The market traded into it with no power, playing around. But as soon as we hit this area right here, right, we went back up, tested the low, but it's within the fair value gap. And what I meant when I said there are a lot of PDRAs right here, this guys is called a breaker. This low is called a breaker. So it reached this area and used it as a breaker, right? Also this one here, it used it as a breaker within what? A fair value gap. So since we use this area as a breaker within a fair value gap, that's a high probability setup for more sales. Literally high probability setup for more sales. And 5-minute chart. These charts keep on taking me way back. I have to move back. But it's okay, guys. Anything for you guys. Because usually this would be making me mad. But guys, while I'm doing this, guys, don't forget, guys, we are fighting to get this channel to 1,000 subscribers. Oh Lord, it's fine. We are fighting for this channel to get to 1,000 subscribers. and I really need to buy a trading view plan. I've been postponing things. It's time I really buy it. But back to the 15-minute chart. You saw the example there I explained, right? Let me get another one. Perfect one. Bam, bam, bam. We're gonna kill these charts. We must milk NASDAQ, guys. You must end the year on a good note, hey? Cause me, this December, guys, hey, I'm not going out, yo. I'm working on this YouTube channel. I'm trying to be a better person here. Really. Cause, you know, the first few videos, you know, you can feel when a person is still starting that, damn, okay, the nerves are hitting. But, yeah. We're gonna be back with more energy every video, getting better every video. Yeah, chopping every video. But anyway, guys, look at this. This is a 15-minute chart, right? In the 15-minute chart on this day, the market moved, okay? It moved. Where did the market open? Somewhere here. It ranged. Created a what? Asian low. And a London high. After creating a Asian low and a London high, it came back in the afternoon and broke that low first. NASDAQ for you. It broke the Asian low and went to come break again the London high. So a lot of you are gonna ask me, oh, what happens when there's these type of situations? Guys, I won't teach you that yet. It's just something I just noticed off the dome because I know what's going on. But okay, let's look at this like market maker structure shift, né? Cause right, this was the London high. Let me mark the high that initially broke, cause it was ranging, right? It was ranging for the longest time and had a high right here. This was the longest range you could ever see. It went up, it broke the high first. I've been saying this. I'll repeat this. The market, when we are going for higher prices, keep this in mind. We will break the high first. After taking the liquidity off the high, either the Asian high or the London high, right? Usually in this situation, we had an Asian high. We had an Asian high or French session high. I don't remember that. I think I'll double check. But we had a high here. Asian created low. The high here in this area where it was ranging. We broke that high first. That gave you the indication. Okay, we just broke a high here. What are we going to do? We're expecting higher prices. But first, we have to go take out the sell side liquidity to get the push. So as a painter, we're painting and you touch the high part here, so you have to come back and touch the lower parts here. Wait, did that sound wrong? Sorry guys. But anyway, we went up and broke this high first and created our own high here. Then went lower and broke the low. As soon as we broke the low, boom, this happened. But look at this. Some trades you would not understand. Look at this. This is a perfect example of an inversion fair value gap. But teaching an inversion fair value gap is quite simple, hey? Why am I zooming out? Hey. There's a lot of, I don't want to confuse you with a lot of things, that's why. But in this strategy, it's like the inversion fair value gap is a violated fair value gap. Okay, the inversion fair value gap in this area, what? the fair value gap is broken. This candle here, what does it do? It retests this area. So in this area, what do? You take your buys. No way, nah. Dumb thing. You take your buys targeting this high right here. Perfect trade. Then stop loss right here. 20-point stop loss. And you're in business. So here, since we knew that we are expecting higher prices, this fair value gap here would be violated. After it's violated, when we retest it, we use that fair value gap as a buy area. Because this was a 15-minute CB. We use it as an inversion of that. In other words, we use it as a 15-minute BC. And we buy from here and target the highs. So in this area, what I was explaining is that we range for the longest period of time. And what did we do after the range? We broke the high first, indicating that we're expecting higher prices. Then after that, we broke a low, taking the liquidity to push us up, to give us that energy and then influx to go up. And what did we do? We had a fair value gap here, where a lot of people will be thinking, oh, this is a double top coming. No. So it broke the fair value gap, retested this fair value gap, and what did it do after that? It shot up. Here's your perfect buy entry right here. So guys, also here, 1, 2, those are runaway gaps, and that is what initially pushed us up like this. So what did we do here? We broke we took the liquidity of the Asian highs first, then we went for the Asian lows, then boom, London highs broken in the New York session when we were expecting higher prices initially. Yeah guys, so I really don't want to make this a super long video. It's over 30 minutes now. But if you have stayed for this long, you've really got the juice. You've really got the juice of what I've been trying to instill in you. As I'm explaining it like this. Like, what I was trying to say with that, you see right here. You see, we've been looking at this price here. You see right here. Now, there's this area here, right here. You see it? That's an order block. This red candle is an order block. This is a fair value gap. Look where the market turned. In the 1 hour PD array. This is a 1 hour PD array. We turned in the 1 hour PD array, and we had a 15-minute market maker structure shift into the inversion fair value gap, and boom, it was a buy. That's what I'm trying to instill in you. Let's look at the 1 minute chart. I'm not really going fast, so it will allow me, because those further prices didn't want to allow me to use the 1 minute chart because it was too far. But not that buy. Oh my lord. It's fine. It also doesn't want me to use it. But anyway guys, you get the gist of it. Here's this area. I'll use the 5 minute as an example. This area right here, let me actually mark it for you so you actually see what I'm speaking about. You see here, fair value gap mode. You see, fair value gap in this area, and it was the most effective entry. I would have taken this entry right here, because I'm at that type of level where I know, okay, here we are going to do this. Then in the lower time frames right here, I'll look for my second entry. Then boom, we are up there and targeting these highs. So yeah guys, that was the gist of it. I know I didn't go into deep detail about what's going on here. I know I didn't go into deep detail, but you get the idea of how it works on the higher time frames and the lower time frames. Because what I explained, it doesn't need actually for you to like see, like, okay, it might need for you like to see a lot of examples of me explaining it, but when you see that one perfect example that I gave you right here and the other one, you get the gist of how to find an entry with the market maker structure shift. So to close off the video, I'm just gonna recap on what we did here. We did the higher time frame analysis, right? And we saw that we need higher prices, so we need this area not to be really broken and tested fully. We can't just break these lows and test this area and go up, because we need higher prices. We need to create the high of the year. We need to really create the high of the year this week. After creating the high of the year, we can start looking for the sales. You get me? So yeah, expect the high of the week this week, because we're really bullish. And after we get that, we know that we'll look for sell opportunities. How are you gonna find a sell opportunity? You see here how it happened. Here is a perfect example. It ranged. It broke the low first. That will happen. After breaking the low first, we wait for it to go break the high. After it breaks the high, that confirms the liquidity taken, and we wait for the other low to be broken. So in this example, you see this low here, it was broken, it went back, broke the high, it came back. As it came back, market maker structure shift as we break this low, right? As we break this low, market maker structure shift, and we went lower. Then when we returned here, this is our perfect entry at the breaker and fair value gap, and we sold. You get me? Things like that. And we found another entry right here where market maker structure shift, we broke a low here, right? We broke that low. After breaking that low, the market came back, boom, we sold. And in this area, you might find, why did it turn like this? It went for this whole order block by the last candle of it. It passed the mean threshold here. So in other words, it would have taken me out. Honestly, I won't lie to you. In this area, they would have taken me out. But when it comes back, after breaking the low, look, it breaks the low here. After it comes back and retested here, I would have entered it and killed this sell. But yeah, guys, this has been a long video with a lot of information, with a lot of things. What I want you to do, guys, is note down these little things, because they're building up to the video of the year. I'm going to build up to the video by video by video, where I leave little things to make you understand what I'm actually doing. Right? But guys, all I want to say is thank you for watching this video. If you have came this far, I really appreciate it. Don't forget to like, share, and subscribe. Guys, I'm trying to get this channel to 1,000 subscribers. Let's keep on pushing and let's keep on working.